Here's the hard truth. Financial advisors are not go-to-market advisors. Too many businesses make decisions based on what the numbers say, when the real problem isn't in the spreadsheet. It's in the strategy, it's in the structure, it's in the story your teams are telling to the market and to each other. Your financial advisor can keep your books balanced, of course, but that doesn't mean your business is aligned. I can tell you this because my background is in business administration. I majored in accounting. I know how to read a financial statement and I know how to read a go-to-market plan. And what I have learned after years looking at both is that they rarely tell the same story. A P&L might show a drop in your revenue, but your go-to-market, it often reveals the real reason why. Marketing and sales running in parallel instead of partnership. Operations sprinting while strategy sleeps. Finance counting symptoms while the system quietly breaks down. That's not mismanagement. That's misalignment. Let's start at north of the Curao Compass. Structure is the skeleton of your organization, and weak bones make movement really painful. When accountability is fuzzy, every report becomes debatable. When teams don't share a common language, even your financials start to lie. Not intentionally, but structurally. Let's imagine a company. We'll call it Solara Tech. They're a mid-sized B2B software firm, struggling with flat growth for 3 quarters. Their CFO believes the issue is overspending in marketing. But when we mapped their compass, the story changed. Marketing reported to the CMO. Sales enablement sat under operations. Customer success, strangely enough, reported to finance. Each team was performing well, individually, but collectively, they were misaligned. So when revenue declined, the financials said costs are rising, but the structure said connection is missing. Solara Tech didn't have a finance problem. They had a north problem. Structure isn't about control, it's about clarity. Ask yourself this: where in your business do financial reports outpace structural reality? Let's go to East. By moving to East, we're going to the go-to-market strategy. This is where most financial misreads begin. Because finance measures output, while go-to-market reveals sequence. You can't interpret a revenue drop without asking, what story were we telling the market at that time? Solara Tech marketing launched a big campaign in March, but sales didn't get trained on the product messaging until May. And operations couldn't fulfill new contracts until June. For 3 months, their customer experience was out of sync. And the financial statements reflected it. The CFO saw a problem with raw. But the real problem was not raw, was rhythm. It reminds you revenue follows coordination, not coincidence. Before you call it a financial issue, check your sequence first. Every brilliant go-to-market strategy eventually meets its toughest opponent, reality. That's the West, operations and enablement in the Curao Compass, the engine room. This is where strategy either scales or collapses under friction. At Solara Tech, their CRM didn't sync with their marketing automation platform. Their dashboards were pulling all data. Every executive meeting became a debate about which number was true. If your systems tell 3 stories, your financials will always look like chaos. West teaches you, don't patch friction, fix it. Find the problem that keeps returning every quarter. That's not bad luck, that's architecture. Strategy doesn't die in bad ideas. It dies in broken workflows. Now we arrive at South, finance and revenue outcomes in the Curao Compass. This is where clarity meets truth. Finance is the scoreboard, but the game is being played elsewhere. When I look at South, I ask one question. Do your numbers reflect your narrative? At Solara Tech, the CFO's dashboard tracked margin, customer acquisition cost, and lifetime value. But none of those metrics were tied to customer data from go-to-market. So they could tell how money was being spent, but not why outcomes were shifting. Once finance and go-to-market reviewed the data together, the real picture appeared. They didn't have a spending problem. They had an alignment problem. South reminds us profitability is not just math, it's meaning. Are your financial reviews about performance or about learning? Because performance makes you accurate, of course, but learning makes you adaptive. And finally, the center, the heart of the compass, the customer. Every financial trend begins and ends with the customer. At Solara Tech, customer feedback revealed something simple but powerful. They loved the product, but hated the handoff from sales to onboarding. Retention was dropping, not because of the cost, but because of trust. When your customer reality diverges from your internal story, your financials will eventually expose it. The customer is not the end of the journey. They are the center of the entire system. When your center is clear, your numbers finally start to make sense. Finance shows what happened, but go-to-market shows why. So here's your compass check for this week. If you're facing financial shortfall, don't start by trimming. Start by tracing. North tells you if your structure can carry your growth. East shows whether your go-to-market direction is aligned. West reveals where your execution slows you down. South tests whether strategy reconciles with revenue. And the center, your customer and marketing, confirms whether it all works. Don't just balance your budget. Balance your business. Because clarity doesn't live in your spreadsheet. It lives in your strategy. Until next time, keep leading with clarity, not certainty, because certainty is brittle, but clarity endures. Until next time. If you like this episode, please like and subscribe and comment. I want to know your thoughts.